Hello everyone, welcome to Telugu One Academy. Today friends, in the topic of internal security, we will be learning about new topic, that is money laundering and its prevention. From the figure which I have been provided for you here, you can observe that money laundering word and two different pictures. So from the word itself, that is money and laundering. So these two words define whole aspect of this topic. So when you get some illicit money, that is unclean money. So unclean money is nothing but you are getting money from illicit sources, like doing by smuggling, drug trafficking, prostitution, all this money, or through organized crime, all this money is called bad money. When you take all this bad money and you want to clean it and to showcase that money as a way that it was a clean money. You see, you got bad money, you put in the washing machine, you cleaned it and you dried it. You are saying that the money what I got is a clean money. That is nothing but through a legitimate source is called money laundering. That is turning bad money into a good money or making to look in such a way is called money laundering. So my friends, in this class we will be learning about money laundering, different layers in money laundering, what are the aspects of money laundering, and also the application of money laundering in that is fighting of money laundering and its institutions in India. And in the next class we will learn more about the money laundering. Okay, so we will enter into our first class regarding the money laundering. So this is the basic definition of money laundering. You see, money laundering is a very wide aspect. That's why you can't give a universal definition for money laundering. Okay, but basically Organization for Economic Cooperation and Development and even Interpol have tried to give a definition to money laundering. Even within India, the Prevention of Money Laundering Act, Prevention of Money Laundering Act 2002 also defines the process of money laundering, not exactly what is money laundering. You see, as per OECD, money laundering is a process of concealing illicit gains that were generated from criminal activity. That is, you got some money from criminal activity and you are showing that you got this money from a legitimate source. Okay, you will understand more how this bad money is turned into a legitimate source. Now, according to the Prevention of Money Laundering Act 2002, okay, it was the first step taken by India to make a law against money laundering. When you see, it defines whosoever directly or indirectly attempts to indulge, knowingly assist or knowingly is a part or is actually involved in any process or activity connected with the process of crime and projecting it as a untainted property shall be guilty of offence of money laundering. That means if you are participating or if you are supporting that participation or if you know that some participation of illicit activity is going on and you haven't not reported, even after knowing that and placing there yourself, then you become a person who will be convicted under the Act of Prevention of Money Laundering. Why exactly do people do money laundering? Because basically, as I told you, all this money is an illicit money or a money which has been evaded. Okay, basically you see, the rich people have to pay more and more taxes. On an average 30%, 25% of taxes they have to pay on their earnings. So who would like to lose around 25 rupees from their 100 rupees of earning when he is left with only 75 rupees? Then what they do, they try to store this whole money which they evaded from the tax officers and they want to utilize outside also. But you see, evading tax is a crime and that money will be called black money. So all this process makes him makes that person as a criminal. In order to not become a criminal, what they do is this money laundering. Try to bring all this black money and put it in some business, saying that it is some other money and making it a good money. For example, I will tell you what happens in most of the restaurants which are very hi-fi and do not have much of customers. What they basically do is they do the fake invoices. That is, they say, if for example that hotel, if one hotel I have, hotel, this hotel gets around 100 customers daily. Okay, what they do is, instead of 100 customers, they will make a bill for 150 customers. Okay, then what happened? These 50 customers who haven't visited this hotel, they put that bill that these people have paid around 1 lakh rupees in a total. So now what happened? If you have 1 lakh rupees which you have evaded from tax, you will just show that 1 lakh rupees you have gained through this hotel transaction, or a fake invoice where taxes are very less, Basically, you know, the GST slabs, they are all low, 18% maximum. Okay, so that's why you will use such a technique to evade taxation. Sometimes you will also do money laundering for the purpose of drug trafficking or to involve in organized crime activities. Okay, to involve in smuggling, arms sales and other crime including drug trafficking and prostitution. And if you are a corrupt official and you have lot of money, then how would you like to show that your source of income is very legitimate rather than through corruption, which is a crime again? Corruption, embezzlement, insider trading, bribery and computer fraud schemes can also produce large profits. The money generated from such illicit activities is considered dirty and need to be laundered, that is, they need to be cleaned. The criminals need a way to deposit the money in financial institution, yet they can do so if money appears to come from legitimate source. By successfully laundering the proceeds can be made to appear clean and the illicit gains may be enjoyed without fear of being confiscated or being penalized. That is, all the money you get from illegal sources, you can happily use that whole money, okay, without any scare that you will be penalized tomorrow. So how do you think all this process of money laundering, from making a unclean money or a bad money into a clean and good money, how you will do? So this is a 3-layered process. In first process, this is how the money laundering goes on. First, you have your dirty money and you will try to place this dirty money, okay, into a bank. How will you place? So if you are depositing such a huge amount like 10 lakhs, 1 crore, then banks will immediately give this information to Ministry of Finance and they will have a look at you. Okay, how this fellow is getting all this money from, what is its source of income? So instead of doing that, what will you do? You will divide that 1 crore into small deposits like 50,000 and you will distribute among your workers and ask them to slowly deposit again. Okay, this is called, okay, dirty money integrates into the financial system. Next is layering. So second step is called layering. In layering, what happened? Transfers to the bank account of company X, offshore bank accounts. What will you do? You will ask all these persons to invest in that company, somewhere in offshore or some other company which is a shell company of yours. Okay, so then what happened? This offshore banks, they will take in the form of loan. Okay, they show that we are getting such an amount of money we are selling, but no other product we have sold. For example, what happens in shell company, my friends? I will distribute all this money to my company people and say, you say that you have bought some products and you have consumed that product. Like you will say that I got a ring from that company which sells a ring and tells that that ring gives you good fortune and that price was 50,000. So I paid, I got it, but I lost that ring. So in such a way, there is no ring, there is no product also. Even if there is a product also, it would be a cheaper one for 500, 100 rupees wala. So then the whole thing, the whole money is getting into the financial system as a clean and good money. Next, what happened? It integrates. Integration in the sense, it totally got into a good money and it came into the economy where this person can utilize this whole money for any of his luxury. That he can buy aeroplane, he can buy a good property, he can even build a big house, he can also invest in infrastructure. All this is the basic process how the money laundering gets from dirty money to a clean money. So next thing, so let's see each and every step once again so that you can understand more clearly. The first thing as placement stage. This stage is very crucial, my friends, because you can be detected by the enforcement departments. You can be caught easily. So this is the most prominent layer. At this stage, criminally derived funds are introduced into the financial system. This is the riskiest stage because large amounts of cash involved which can catch the eye of law enforcement. So launderers break large amount of cash into less conspicuous smaller sums that are then deposited directly into the bank account or used to purchase monetary instruments such as checks, money orders, bonds, okay, where your KYC norms are not needed. Such an items you will be purchasing. Next is the layering stage. That is, you are covering off your bad money. You are slowly layering it. The money is sent through various financial transactions so that it changes its form and make it difficult to follow. Layering may be done in the following mention. So how you will be do layering? This is very important. Please note this down. Several bank to bank transfer which may be in smaller amounts. Okay, from one bank to one bank, another bank, that you will not even know how this whole transaction has come out. Wire transfers between different accounts in different names in different countries. You will send it to other countries, it will come back to you. So in such a way, different amount. Making deposits and withdrawals to continually vary the amount of money in the accounts. And changing the money currency, that is, you are changing the whole currency only, that you will be sending this whole money into USA to convert into dollars. Purchase high value items such as houses, boats, diamonds, cars and change the form of money. Disguising the transfer as payments for goods and services provided. That is, as I told you, is in the case of hotel or as it is in the case of you got some legitimate sources. That is through shell companies. Next is integration. As you have already integrated this whole money as a clean money, now you can't easily bring out that the enforcement people do not have any identity of this money and they can't put you in a jail or behind bars. The final stage at which the laundered property is reintroduced into the financial system as legitimate money. That is, whole this money which you have layered will come to you and you will start investing this money again as a clean money. At this stage, the launderer might choose to invest the funds into real estate, luxury items or business ventures. At this point, the launderer can use the money without getting caught. It is very difficult to catch a launderer during the integration stage if there is no documentation during the previous stage. So what are the various techniques used for money laundering? As I told you, one example was shell company. That this company will have no product, no business transaction going on, but it shows in its record book that it has done some business, some production. And next is structuring the deposit. This is very important again, please note down. This is a method of placement whereby cash is broken into smaller deposits of money which is then exchanged by many individuals who are called smurfs. This is very important term. Please remember, try to write such terms in your answer. To avoid anti-money laundering reporting requirements, this is also known as smurfing because many individuals are involved. That is, you break your money, distribute it to many other people, all these people come and slowly deposit into your account. Next is third party checks, okay, and next is bulk cash smuggling. In bulk cash smuggling, this is also sometimes called in airports where people are got caught. Okay, what happened, you will give lot of money in foreign exchange, they will put in their pockets or inside some personal private parts and they try to smuggle this money through airways or any other route. Okay, counter checks or banker drafts drawn on different institutions are utilized and cleared via various third party accounts. Since these are negotiable in many countries, the nexus with source money is difficult to establish. That is, you get a check from an international bank, you take that check and go to some other country and withdraw that check, no one will find it out. Next is through credit cards also you will be doing. You will use more and more credit cards and pay those bills by using this black money. Clearing credit card and charge card balances at counters of different banks. Such cards have a number of uses and can be used across international borders. For example, to purchase assets, for payment of services or goods received or in a global network of cash dispensing machines. For example, you take a credit card of value of 20 lakhs. Okay, you have a black money of 20 lakhs. Now you will not immediately pay that money, na? You will slowly distribute that money. So that's why credit cards are also being used for the purpose of money laundering. Next important term in the money laundering is Hawala. So this Hawala basically means trust. Hawala means what, my friends? Trust. In India, there is a lot of Hawala going on. Okay, even not in India, whole over the world, Hawala is being practiced to launder the money. How is this done? Basically in Hawala, there is no movement of money. There is no movement of money. See, Hawala is a system of transferring money and property in parallel arrangement, avoiding traditional banking system. You will not use any bank, you will not use any electronic. So recently cryptocurrency we are using, but traditional Hawala, there is no movement of property or no movement of money across the border. It is simplest way of money laundering and banned in India. Okay, we have banned the Hawala transactions under Binami Transactions Act, etc. So how does this Hawala takes place? Basically in Hawala, my friends, if you have a lot of money, you will go to a Hawaldar A. You will go to a Hawaldar person A and you will say, I have around 100 crore in Indian rupee. Okay, in Indian rupee. If this was not dollar and this was Indian rupee, then you will say, I want this 100 crores in dollars, and in commission, he will take around 2% commission or 1% commission, which is very small comparatively, that he will take 1 crore, okay, here. And this Hawaldar B will also take small 1% commission, that is 1 crore in Indian rupee, and he will give the whole money of 100 crores in euro or dollar, whatever currency you want. There is no physical transfer here. You will just go to that country and say that I have this proof, I have deposited my money at Hawaldar A, so please give me the 100 crores of money from Hawaldar B. So this is how the whole Hawaldar system takes place. Okay, how it works, you can see here. Next, what is the status of Hawala in India? So Hawala is banned under Prevention of Money Laundering Act 2000, okay, and Foreign Exchange Management Act 2000 and Prevention of Money Laundering Act 2002. So even RBI cannot regulate. See, Hawala transactions are out of traditional banking, so they can't be regulated by any of the regulatory system. So it should be always monitored very carefully, and it is under the mandate of various intelligent institutions. Okay. Who knows what this Hawala money could have been used for? Especially in the internal security, when you see the Hawala, it is very high in across Bangladesh border and across the Jammu and Kashmir border, where most of this Hawala money is used for increasing the terrorist insurgency within India. So Hawala network is being used extensively across the globe to circulate black money and to provide funds for terrorism, drug trafficking and other illicit activities. So why do people indulge in these Hawala activities more and more? Why? The reasons for extensive Hawala. Because the percentage what this Hawaldar takes is very low. Okay. The commission rates what they take for doing this Hawala is very less, and no requirement of ID proof. You do not to disclose where you got this income from. Okay, and this is the only way to transfer unaccounted income across the border. Okay, there is no physical movement of cash. This is simple and hassle free. You need not fear. You can give your Hawala money here and immediately take all the Hawala money in the next country within the next day itself. Okay, it is reliable and efficient system, and as this Hawala is which comes inside organized crime, we have seen within the organized crime, there is a well structured manner that even one person chooses to do backstabbing to the organization will not die and it will survive, and these organized crimes are always based on trust. So next, now these days we have seen cryptocurrency as a tool which is used for money laundering. Okay, especially during the time when India went through a demonetization. Okay, in the year of 2015, these cryptocurrencies have been extensively bought by the black money people or illicit money containing people, so that they can easily sell this Bitcoin in a foreign territory and get all this money. So Bitcoin or cryptocurrencies are the new face of Hawala and money laundering. And even this cryptocurrency have been misused to fund various terrorist activities across the world. So these are some famous Bitcoins, my friends. Okay, when it comes to the cryptocurrency status, the RBI, Reserve Bank of India, will be the lead agency to deal with the cryptocurrency in India, which has given in the year 2018 a notification which was struck by Supreme Court of India. In 2018, it said it will not support any sort of digital form of currency, cryptocurrency in India. But recently, very recently, in a budget speech, our Financial Minister Nirmala Sitharaman ji has said that by the year 2022, by the end of year 2022, we will get a digital currency of India, which is also a cryptic type of currency, a digital mode of fiat currency, digital fiat currency, digital fiat. So for this purpose, as this order has been cancelled by Supreme Court, and our Reserve Bank of India, RBI, is expecting to bring a new law to control the cryptocurrency. As you see, my friends, India is going to launch its own cryptocurrency. Then there is a scope that it will also support some other legitimate cryptocurrencies which are backed by good amount of sources. Okay, as in the case of Libra, where Facebook thought to release its own cryptocurrency, such a high asset company could be encouraged when compared to Bitcoin, whose identity is not revealed. Okay, next, what is the impact of money laundering on nation? So what is the impact of money laundering on the nation? So we'll see this impact in various terms, that is basically socio impact, economic impact, and even economic impact we'll see macro level impact, even political sense also we have been impacted by this activity of money laundering. In social sense, we basically, if you see, as I told you, money laundering is used in organized crime. It is even used for terrorist financing, and the proceedings from drug trafficking, armed trafficking are used in money laundering. Then it shows that stability in the society will get affected, because most of these arms or drugs which enter through this money laundering process are very harmful for stability of society. Transfer the economic power from the right people to wrong people, increases inequality, loss of morality and ethical standards, and it also weakens the social institutions, increases unemployment, and legitimate business companies to fail compete with operators operating through illegal money. Okay, all the nascent companies or companies which are established by startup will lose. Increased crime and corruption, which slows down human development and thus affecting societal progress. As I told you, when it comes to the economic impact, we have microeconomic impact, such as giving impetus to criminal activities, policy distortion because of measure errors, potential damage and reputation to financial institutions and market, destabilizes economy, also leads to higher cost of doing business. All the products will become higher cost. Okay, local level can flourish, organized crime at local level can flourish, legitimate business lose their competing edge, and there will be no fair practices in trade. When it comes to the macroeconomy, okay, macroeconomic impacts, you can see misallocation of resources in relative assets, commodity prices arising from money laundering, fall in asset price due to disposition of laundering funds. For example, I will tell you what these money laundering people do is take all their black money or illicit money and try to invest in the shares, which artificially raises the value of that share. So what happened? Whenever this person who has laundered his money will withdraw suddenly, then that share value will fall and all the investors will lose the value of their share. So in such a way, okay. So SEBI has also given few of recommendations regarding this, especially regarding the P notes. Especially regarding P notes. What are P notes? What are its effects? I'll discuss in the next class and more about this. But please note down there is something called P notes, which we'll learn in economy also. Loss of confidence in market caused by insider trading, fraud and embezzlement. Okay, as I told you, insider trading or fraud is a source of money which is used or which is put into the money laundering system. Discourages the foreign investors. Other indirect economic effects are higher insurance premiums for those who do not make fraudulent claims and higher cost of business, therefore generating fewer profits, which make it difficult to break even. Next, in political impact, what happens? Sometimes this all black money or illicit money which has been laundered will be used for funding political parties, and these political parties, when they come into power, will give undue advantages to all these money laundering groups, so that even there is higher economic loss from the top level of governance. Affects the government's capability to spend on development schemes, thereby affecting a large section of population could have been benefited from such spending. Legislative bodies find it difficult to quantify the negative economic effects of money laundering on economic development and its linkages with other crimes, trafficking, terrorism becomes more and more. So how do we want to prevent this money laundering? Okay, prevention of money laundering is nothing but we have to cut the whole system at any other point. Okay, so anti-money laundering involves laws and regulations designed to prevent criminals from generating income through illicit sources. That is, we have to stop at its source itself, that person is not getting any money from illicit sources. The government has become increasingly vigilant in its efforts to curb money laundering by passing anti-money laundering laws. These regulations require financial institution systems to place in, detect and report suspected money laundering activities. So all this put aside, what exactly does this India need to counter the money laundering? That is, we have to have good institutions, good laws, intelligence agencies and good policy, so that everywhere where money is involved, that is either at the company level, either at the investment level, that is where at the SEBI or stock market, or either at the banking level, wherever we see a large transaction happening or a misleading transaction happening by use of technology, isn't it? See, banking transactions are very huge in a country like India. Okay, in a day the number of transactions are increasing just because of phone pay or digitalization of transactions in the palm in India. So at such a time, we can't easily monitor all transactions. Okay, that should be monitored by a well algorithm written computer. Then only we will able to solve this money laundering. So putting all this apart, my friend, we'll see what are the various laws, bodies which are formed by India to counter this money laundering. So the first law which India has formed to counter the money laundering was in the year 2002, that is Prevention of Money Laundering Act. Under this Prevention of Money Laundering Act, we have made if any person or persons who are indulged in money laundering as a criminals, and we have even placed various sections and various levels of preservation of authoritative powers, so that these people are not left out from the criminal justice. So the act and rules notify thereunder impose obligations on the banking companies. Even this act imposes obligation that the bank company need to provide information regarding every transaction what it does, especially suspected transactions which have value more than which have value more than 10 million or 1 crore Indian rupees. 1 crore. Okay. So financial institutions and intermediaries to verify the identity of customers. That is, these days you will see KYC norms. Even when you are doing Paytm via your phone, it will ask if your KYC is not done, you are not eligible for the transaction. That is, identify its clients, maintain records and furnish information in prescribed form to the Financial Intelligence Unit, which was established under Department of Revenue in Ministry of Finance. Ministry of Finance, Department of Revenue. Okay, remember these 2 points. I'll also tell you very clearly about the Financial Intelligence Unit. When you have seen my classes regarding various intelligent agencies in India, there I have taught you regarding the Financial Intelligence Unit, okay, of India, and also something called Egmont Group. Okay, but for the purpose of this topic, I'll also repeat that so that you understand what to write in such a question which comes from money laundering. So it seeks to bring certain financial institutions like full-fledged money changers, money transfer services and MasterCard within the reporting regime of the Act. That is, ATM service providers, all these people should also give them. So within this Prevention of Money Laundering Act, we have Schedule A and B where various offences have been mentioned. Okay, various legislations in Part A and Part B of Schedule of the Act for the purpose of money laundering. You see, we have provided number of crimes in this. In case of cross-border money laundering, the Act enables the central government to return the confiscated property to the requested country in order to implement various provisions of United Nations Convention against corruption. That is, this law provides international cooperation also based on the treaties which India has signed and ratified, and also based on bilateral MOUs. Okay, that is, it's not just a domestic law but an international law. The Act prescribed for formation of 3-member adjudicating authority for dealing with matters relating to attachment, confiscation of property under the Act. Now let me try to show you what exactly is inside the law. That is, what about Prevention of Money Laundering Act. Because my friend, you have to understand that Money Laundering Act has been amended several times. It had been amended in the year 2012, 2018, and it need to be amended more and more, okay, in the future also, because we have got a very new body recently, that is Insolvency and Bankruptcy Code, where okay, Insolvency and Bankruptcy Board or Insolvency and Bankruptcy Code, where few operations are overlapping under the Prevention of Money Laundering Act. Okay, in 2002 the bill was passed and Prevention of Money Laundering Act came into existence, okay, in the year 2005. Okay, expansion in its scope, the Act prohibits laundering of proceedings. Model based on, whole Money Laundering Act was based on the Criminal Justice Act of United Kingdom, imposes criminal liability on those who know or suspect that someone is involved in laundering the proceeds of the crime and fail to report it. That is, if you even know, if you have identified all this, even you will be liable under criminal proceeding under this Act. And this Act also contains various provisions. That is, what is the term of imprisonment one will be given if he is proved to be culprit. Under its Section 4 of the Act prescribes the punishment, okay, offence of money laundering, and describes in Section 3, this is the definition of money laundering. Whoever directly or indirectly attempts to indulge knowing assets or knowingly is part in involving money laundering. That is the first definition what I have told you regarding money laundering. It is provided in its Section 3. In Section 4 provides for punishment, that is rigorous imprisonment of 3 to 10 years and with a fine of 5 lakh rupees. Okay, and chapter 3 of the Act lays down the provisions regarding attachment and adjudication of confiscation. That is, what can you confiscate all the property of the person who is indulged in this money laundering. Section 9 provides for absolute vesting in central government of all rights and title of confiscated property free from all encumbrances. Section 10 provides appropriate procedure for management of confiscated property. That is, central government is the only authority who can confiscate all the property which has been obtained or been constructed by using money sourced from money laundering. Chapter 4 of the Act deals with obligation of banking companies, financial institutions and intermediaries that they need to furnish the information in a prescribed form, furnish it as director, verify and maintain records of identity of customers, that is KYC, as I told you. Next, chapter 5 deals with summons, searches, seizure and source of variety wide powers. Okay, that even these people who go into the check whether this money has been laundered, especially basically enforcement directorate and income tax department do this work, and when these officers go at the ground level and find that person, they can even ask that person to take an oath and reveal every information regarding this. You see, section 17 of the Act empowers director where he is reasonably believed which to be recorded in writing, that is, any person has committed the act of money laundering or possession of proceeds of crime or in possession of records relating to money laundering, to authorize any officer to search the premises, seize, record the property found, make inventory and examine the person in control of oath. The other provisions of the Act include establishment of one of the 4 important institutions, that is appellate tribunal, special courts which deal with the Prevention of Money Laundering Act especially, and reciprocal arrangements for assistance in certain matters, that is international level, that if they are providing you the service or data regarding money laundering in their country, and we should also provide like that. Okay, and other. So basically 4 major authorities are important which you need to know under the Prevention of Money Laundering Act. That is adjudicating authority who has power, and if he has given a direction that this person is guilty, then he can move to the tribunal, appellate tribunal. Okay, and he can there is also a special court to fasten the process of making a person culprit if he has indulged in money laundering. Next, Director Financial Intelligence Unit is also a part of Prevention of Money Laundering Act. Very, very important. Now, if someone asks you, where does the powers of Financial Intelligence Unit come from? Then it should be said that Prevention of Money Laundering Act gives that power to this body. Okay, in addition, banks are responsible for reporting any transaction that I told you. The Act contains 75 sections imposing good deal responsibility upon financial institution. Indian government indulged these provisions in the Act despite the Reserve Bank of India did not approve. See, when this Act was formed, that saying that each bank should give the details of all the transaction, Reserve Bank of India did not approve. Instead, after opposition from RBI, we formed this Act because we felt money laundering is the major source of illicit activities, especially terror financing in India. So eventually, as I told you, it was amended. Few different provisions were provided. So let me also tell you about those important provisions. Okay, in 2012, when Prevention of Money Laundering Act was amended, we have added few important concepts. Bill introduced the concept of corresponding law to link provisions of Indian law with the laws of foreign country. That is, if similar law is present in that country, then you can start proceeding in India itself or in that country also. That is reciprocatory law. It also adds concept of reporting entity, which would include banking company, financial institution, intermediary or a person carrying on a designated business or profession. The Prevention of Money Laundering Act 2002, fine was up to 5 lakhs only. But this limit has been removed and now the court can give fine more than 5 lakh. It can be 10 lakhs, 20 lakhs, even in crores also. The Amendment Act removed this upper limit under Prevention of Money Laundering Act 2012. And the Act has provided for provisional attachment and confiscation of property of any person not exceeding 180 days. This power may be exercised by authority if has reason to believe that offence of money laundering has taken place. that is up to 180 days he has to take care, and after that if some person has claimed that money, then he should be given back his own property if he is clear. The bill expands the definition of offence under money laundering to indulge activities like concealment, that is not showing or closing that property, okay, acquisition, possession and use of proceeds of crime. So these three have been added. Then in the year 2018 we provided more definition, that is proceeds of crime we have added. For this we have added a definition. It now allows ED to proceed against assets of equivalent value located even outside the country. That is, even this person who has indulged in money laundering has a property in United Kingdom, okay, then ED people can go to United Kingdom and confiscate all his property and sell it and gain the money. Bail provisions are also provided for the person who have been indulged in the Prevention of Money Laundering Act, because Supreme Court thought that these are very stringent and that is not necessary, so they made liberal arrangements. Next, corporate frauds is being included in as schedule offence. Okay, even Enforcement Directorate was given power regarding this. Even details of sharing, amendment also makes it mandatory for ED to share the relevant details with other intelligent agencies, okay, which look into this prevention of money laundering also. Okay, like sometimes you need to know data regarding money laundering for Narcotics Control Bureau, where they deal with trafficking in drugs. Okay, these two are very interlinked with each other. So organized crime and terrorism, so all these are interlinked, so they need to share the relevant information. And restoration of property is very important. Whosoever the property is confiscated, whatever the property has been confiscated, if a legitimate authority of that source of property comes and asks for that, then he should be restored with that property. Rightful claimants, even during the trial, even when the trial is happening, if he comes and claims that this property is mine, not that fellows, and this is my source of income, I bought this property from through this source, then he will be given the whole property which has been confiscated. Apart from the Financial Prevention of Money Laundering Act, we have various other provisions such as suspicious transaction reporting, okay, within the Prevention of Money Laundering Act, and Financial Intelligence Unit, okay. Under the Prevention of Money Laundering Act, we have formed the Financial Intelligence Unit under Government of India in the year 2004. What does this agency do? You see, this is under the Ministry of Finance under Department of Revenue. Okay. It is a central national agency responsible for receiving, processing, analyzing. It receives, it processes, it analyzes and disseminate information relating suspected transactions, even from international agencies also, or neighboring countries or any other country which India has signed a treaty regarding sharing of information regard to money laundering. That information also goes directly to the Financial Intelligence Unit. FIU is also responsible for coordinating, strengthening efforts of national and international intelligence, investigation and enforcement agencies in pursuing the global efforts against money laundering and financing of terrorism. So, Financial Intelligence Unit is an independent body, reports directly to the Economic Intelligence Unit or Council headed by Finance Minister. So, this is its own important intelligence agency, my friend, very independent, reports to Economic Intelligence Council of Finance Ministry. Next important institution, though I have told regarding this mandate in various institutions, okay, in another chapter, I'll just give you a brief introduction regarding Enforcement Directorate. So, Enforcement Directorate also comes under the Ministry of Finance. So, it works with two basic important acts. Those are Foreign Exchange Management Act, FEMA, and another act is Prevention of Money Laundering Act. This also comes under the Department of Revenue. For operational purpose, the policy aspects of FEMA, its legislation and its amendments are within the purview of Department of Economic Affairs. Okay, two departments. It has link with two different departments. Please note down once again. See, the directorate is under the administrative council of Department of Revenue. Administration is with Department of Revenue, but its operation is with Department of Economic Affairs. Dual control. Next, we have some other laws like within indirect taxes. To prevent this money laundering, what we have done, we have various MOUs and we have even ratified various international level conventions on money laundering, or not on exactly on money laundering, but to prevent that illicit money has been sourced or has been put into the what you can say world trade. Especially we have MOU with World Custom Organization, where we have signed such a various convention. You see, Customs Convention on temporary import of scientific equipments, Kyoto Convention, and all these important convention. Okay, so why did we sign these important conventions? Is, you see, the scope of cooperation under these agreements include exchange of information, enabling detection of false declaration of value, description or origin of goods, providing information or diversion of goods, authenticity of documentation made during surveillance, and suspect of goods, persons, means of transport. I will tell you a basic example. What happens when I am exporting an item? I will put just a very basic item and I will say I will increase its cost. Okay, I will make a doll by using plaster of Paris and I will say this contains a pack of bronze made items because bronze is costlier, and when I send these fake items I can claim that whole money. Okay, whole money, that by sale of that item I have got this much of money, but originally I have sent is only POP item. So to find such a illicit activity which can make a bad money into a good money, that's why we have signed such a various agreements with international bodies, especially World Custom Organization. India has also entered the Custom Mutual Administration Assistance under EU, Israel, Russia, UK, Hong Kong. With various countries we have such custom agreements so that we can look into the suspected transaction. Apart from all these, my friends, few other laws dealing with money laundering directly or indirectly include Conservation of Foreign Exchange Prevention of Smuggling Act, Smugglers and Foreign Exchange Manipulators Act, Foreign Exchange Regulation Act, and Narcotic Drugs and Psychotropic Substances Act, Benami Transaction Prohibition Act, and even the Income Tax Act 1961, or the various acts or laws which India deals with to counter money laundering activities within the territories of India. Friends, I would like to end my class here. I hope you have understood what exactly is money laundering, how it happens, why exactly we needed agreements with the World Customs Organization or various protocols, because even in customs also we have, even in trade also we have been indulging ourselves, or many other people have been indulging themselves into the money laundering activities. So putting things all aside, I hope you have understood what exactly is money laundering and its process. And in our next class, my friends, we will learn more about money laundering from an international perspective and what are the steps needed to prevent money laundering and why exactly is money laundering hard to prevent. So that's all for today, my friends. So thank you for watching our video. This is Nikhil from Telugu One Academy. Thank you.